What's happening, my beautiful fallible investors? Today we're gonna figure out where you are in your trading journey. And if you're thinking, AK, that's stupid, that doesn't matter, this is a dumb video. Well, you're wrong, because it is important. Because if you don't know where you are, then how could you know where you're going? You like that line? Yes, pretty deep and pretty shallow at the same time. You can go ahead and quote it, tweet it or whatever. I'm at AK Fallible, so get at me. No, but really, understanding where you are in your trading journey is important because that way you know what type of strategy you should be employing. And by strategy, I mean like what kind of investments you should be getting into, how much you should be risking per trade, and all that sorts of stuff. It's kind of strange though because nobody really talks about this, even though it's very crucial to be successful in the market. So I guess I'll be the one to tell you about this not so secret. So make sure you watch this video till the end because we're gonna help you figure out where you are in your trading journey. But before we get into that, I got a little surprise for you. I did it, guys. I found the best way to trade. Now just follow what I'm about to tell you and you're gonna avoid all the anxiety and stress that comes with the markets and you're gonna make more money than you ever thought you could. And this strategy is gonna work regardless of your account size, your experience, your hair color, your age. Yeah, does that sound too good to be true? Well, it is because I'm lying. Yeah, it's a shitty surprise, I'm sorry, but the point is that there is no perfect solution for everybody. That just doesn't make sense. But yeah, you're still gonna see these online trading gurus try to sell you a strategy they say is amazing, is gonna make you a ton of money. And in reality, their strategy might actually be okay, but it might not be okay for you because again, you have different goals, experience levels, you can handle different amounts of volatility. So their great strategy for them might be a horrible strategy for you. It's the same kind of thing you see in the fitness industry when these bodybuilders are trying to sell you bodybuilding workouts and bodybuilding eating plans. But the truth is, if this is your first time in the gym, you shouldn't be focusing on something stupid like bicep curls. That's not gonna help you out. You need to be spending your time on figuring out how to do a proper squat. And again, it goes back to the same idea of you not being in the same place as that bodybuilder. So bicep curls might work great for him, but for you, you need to be focused on something different. So in trading, you need to establish where you are, what your goals are, and then you can figure out what strategy is gonna work best for you. Now make sure you keep watching because we're gonna go over some examples of a few different types of traders, which will hopefully help you figure out where you are in your trading journey. First up, we got trader number one. Now this guy has a small account, like $1,000 or something. He's in his 20s, doesn't have much experience in the markets, and according to my editor Jose, who makes these graphics, he looks surprisingly like Logan Paul. Okay, so normally a trader like this, who's this young and has this small of account, would be using strategies that are highly volatile, but can get you huge returns. But again, these strategies are highly volatile. And by that, I mean you could get drawdowns of 80 to 90%, and I'm not even exaggerating there. In future videos, I'm gonna explain the structure of markets more and why to get the 500% returns, you're gonna have to sit through crazy volatility and drawdowns. So if you're interested in that video, make sure you subscribe to this channel and hit that bell so you get a notification when it's released. Anyway, if this Logan Paul lookalike doesn't have experience in the markets and hasn't been trained to control his emotions, then he's not gonna be able to carry out a strategy like that with all that volatility. He's honestly better off just using this time to learn. He should be learning all he can about markets and testing different strategies with the hopes of developing a good strategy that he can use when he actually has a decent sized account. Okay, now we got trader number two, who's the same age and has the same account size as trader number one, but this guy actually has some experience in either markets or poker. And I don't know why Jose thought Leo DiCaprio was a good representation of a 20-year-old, because he's not. Leo ages terribly. Anyway, because Leo has some experience in the market and maybe in a game like poker where the volatility and drawdowns are very similar, then he may potentially have the stomach to handle an aggressive strategy to grow his account. But again, it's gonna be pretty tough, so you gotta be trained. All right, now we got trader number three, who I guess looks like The Rock. Wow. Good for this guy. But anyway, he's in his 40s and he has a great job which he loves, and it pays pretty well too, so by this point he's worth a few million. And most of that money he's got with a financial advisor, but he still has a 100K account that he likes to play with. Now this guy isn't trying to be a full-time trader. He likes reading about the stock market and would like to invest some of his own money for fun. So in his position, he's not going to use that highly volatile strategy that we talked about for traders 1 and 2. He doesn't want to deal with all that stress and anxiety that comes from using a strategy like that, because he's already in a great financial position. He just wants to have fun. So he's probably going to have a more conservative strategy, maybe invest in some different ETFs or jump into Netflix if he thinks that looks good. But basically, he just wants something to talk about at cocktail parties, because you know The Rock loves cocktail parties. Okay, now we got trader number 4, Bobby Axelrod. or basically any professional trader that actually works in the industry. Now this type of trader can't use those same high vol strategies that we talked about with trader number 2, because first, there's probably restrictions at his firm against trading that aggressively. And second, these types of strategies don't scale. So if you're trading millions of dollars, there's not going to be enough liquidity in these strategies to actually use them. And he can't casually trade around like trader number 3 either, because this guy's getting paid to actively manage a portfolio and make real returns. So as a hedge fund manager, he's probably going to have a more complex, refined trading strategy where he's going for every extra percent he can. Now this would probably involve some mix of quant strategies with geopolitical, global macro forecasts, and a whole bunch of other complicated stuff. Now this strategy may not make sense for a retail trader because it's too expensive to pull off and way too time consuming. But for a professional who has a whole team of analysts with him and is managing hundreds of millions or even billions of dollars, then it makes sense, because all this extra work that you're doing for a few percent actually does move the bottom line a lot. Now just between these 4 traders I showed you, you can see how different goals really influence what type of strategy you should employ. And of course there's a ton more examples because every single person is in a different situation, but you get the idea. So please, the next time you see some awesome stock or awesome strategy, make sure it fits with your goals and what you actually want to achieve in the market. There's no recommendation or strategy that works for everybody. Now, if you haven't already, make sure you subscribe to this channel and hit that bell for notifications of new videos. I'll talk to you guys soon. Stay fallible out there. Bye.